Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now let's take a look again at the gold market. The gold market, as you can see, the price action is not very impressive. Gold right now feels the force and strength of the resistance area because that's the major 618 from the recent swing down and the weekly pivot resistance one. This market stands below it, but as we said, it will not be the crucial moment if even market will move higher to the 1263 monthly pivot resistance one. From the bearish perspective, bearish point of view, we do not want to see the breakout of this area. I mean 1263. While standing between 1250 1260 is not really some strategy for the bears, and this stands in general in a row with the normal retracement after the completion of significant pattern on the weekly chart. Is nothing strange with this retracement right now. At the same time, guys, currently in today's news we see a couple of important information, a couple of important moments. First of all, recent action, and this action up mostly was triggered by the demand in the Asia, while European demand and United States and the other globe demand stands flat, because that's some contradiction between the current action to the upside and lack of any inflow in the SPDR fund, lack of significant increase in the open interest and the net long position on the United States futures. It means that the institutional investor stands out of the gold and do not put the money in the gold. So it means that this demand, mostly is the physical demand in the Asian markets, on the Chinese market and the India, and mostly it probably comes from the individuals. Before the festival in the India, it's some celebration period. This seasonal trend is based on in the Asian region. And investors right now, in today's update, I have read this Reuters news investors suggest that this demand in the Chinese market starts to decrease gradually. It's the gradually fade out as all people who would like to buy some jewelry, some gold, already have done this, and that really could lead to impact in the market. So we would not see any other support from the market on the market right now. From the institutional investors, and any rally that is not based on a significant demand from the real institutional investors probably will be doomed, and at least we should treat it with cautious, and it's really fragile. That's why the reversal of such a rally and the ending point of this rally really could be very fast, and the market could show a really fast plunge down. Second important moment that we would like to mention here is some rumors concerning the European quantitative easing program. Rumors suggest that European Central Bank will come to the final solution and decision to start the quantitative easing of the corporate bonds buying in December, and could start this procedure, program right from the beginning of the 2015. What does it mean? It means that European stocks will become the new bubble on the financial market. So the bubble from the United States will come to the European Union. In such combination, such situation, if we could call it, the gold market could keep the role of the secondary market, because gold market does not provide any interest bearing. It with the lack of inflation, with dynamic inflation as in the European Union, as in the United States, the interest to the gold market could be really flat and will not be really high, and that really could impact the market. Also add here the ending of the seasonal trend and the active stage of the gold bullish seasonal trend will come to an end right in the beginning of the 2015. That could impact on the market. So we suggest that in the beginning of the next year, closer to the next year, market could be shaken by the new plunge, because why investors will start to purchase gold that will not pay interest while you could buy first class, the blue chips European equities with the high dividend yield, and they will be just pushed up by the new quantitative easing program with the 1 trillion euros, and you will get as the dividends approximately to the 5-6 euro cents a year, and you could get also the the price growth of these equities. That is what we particularly do in our small fund in the recent couple of months. So we already have started to purchase of the European equities, and we have started approximately probably a couple of months ago. We started to sell puts, options on the European equities. So there are some really interesting equities with the stake of the governments with the high dividend yields on the markets that we purchase in anticipation of this program that should be started by the European Central Bank. We think that this really could hurt the gold market in the medium-term perspective, in the perspective of the 2-3 months probably. Well, but today, on the short-term perspective, we will be watching for the CPI data, because it could really shake the gold market, and we will not be surprised if it will lead to the plunge if the CPI data will support the gold, will support the US dollar. The market really could start move down even early. But right now, we see nothing could be done on the gold, because if you'll take a look at the 4-hour chart, yes, it seems that market returned back down below the previous top, but it doesn't look like the real wash and rinse. Okay, so market has formed the high wave pattern here, indicates the indecision. So there is really a lack of data that could push gold market high. At the same time, there is no significant reasons to start push it lower, right? And from that perspective, our trading plan is the same. As we said, watch for the breaking of the harmonic pattern, harmonic swing, watch for breakout of this trend line. As soon as market will return back down and taken out of these lows and break this trend line, this could be the sign of the end of this rally. And the market really could start action to the downside if this will really happen. And as you understand, the CPI data could be really the triggering factor for this action. On the hourly chart, we also see that this rally up has ended right at our butterfly point, but at the same time right now we do not see any thrusting action to the downside. That's why probably it's a bit early to take the short position, because you do not see the confirmation from the price action. Market mostly stands flat, and this really could indicate that upward action is also possible. Personally, guys, I do not take part with this recent rally to the upside, and for me this is a period for the expectation. I'm mostly interested in taking the short position with the gold, and where it will happen it's not very important. Whether it will happen right here, or maybe the market will pass a bit more to the upside to the 1260 area. What I'm interested in with the gold market right now is just when this rally will end. But I'm not interested with this rally itself as the object for the taking position with this rally. That's why I'm not very interested in whether the market will turn down here or it will show another leg to the upside, because I don't have a short position right here and right now. I just wait when this rally will end. That's our position on the gold market. So that's been said, we think that until we will get CPI data, nothing could be done with the gold market. So it's better to wait when we will get that data, and we will see direction when the market will start to action.